Hi everyone, so today we are going to be doing a stock analysis video. Today we're going to be covering Sable Offshore Corp. So let's get right into it. Let's see what they do. They've actually gotten into some recent trouble, so we're going to cover that as well. The stock has dropped, I think like 80%, 85%, so it's been a big problem. And we're going to cover the earnings and the financials. So let's get right into it. So the first thing we have to take a look at is what they actually do as a company, right? And they are a oil and gas company that specializes in offshore oil and gas assets, primarily in the Santa Ynez unit in federal waters off the coast of California. Its core business involves operating 3 platforms, managing 16 federal leases, and running offshore processing facilities and pipelines. Sable also markets its production through off-take agreements and spot sales, and is pursuing a new strategy involving an offshore storage and treating vessel to transport oil and access broad markets. So the core operations, again, are in the Santa Ynez unit. This is approximately 76,000 acres. They are going through a lot of financial difficulties. That has to do with California finding them. They had to fix the pipelines, but we're going to get into that in more detail. I have that open on Google Gemini, so we'll see what's exactly going on. So more or less so, they are an upstream oil and gas company. Its business model involves the exploration, development, and production of hydrocarbons. It secures exploration rights, conducts seismic surveys, drills wells, and manages the production facilities. All right, so fantastic. Now we're going to see the earnings report. Okay. And the earnings for the third quarter were not good. They missed analyst estimates. The EPS came at negative $1.11 and a revenue of $2 million, which both have missed analyst estimates. Bad. Of course, the analyst estimate was negative 28 cents. It came at negative $1.11, like I said. The revenue was bad, $2 million, falling short of the consensus estimate of $83 million. So they really underperformed. Net loss, not explicitly stated for Q3, but the Q2 2025 net loss was $128 million. So they've had really just like a hard response. Other recent developments: Sable Offshore publicly responded to a November 14, 2025 report from Hunter Brook Media disputing certain claims regarding its accounts payable and bonding requirements, financing, and stock changes. The company announced a $250 million financing of $5.50 per share with Jefferies and TD Cowen as placement agents. Benchmark lowered its price target, of course, and it's a significant decrease. Actually, that's a correction because on Tipranks, it's actually a little bit higher, a lot higher. So we'll go on that with a second. But operational updates: the company's focused on developing the Santa Ynez unit offshore California, which restarted production in May 2025. So obviously, a lot of issues. You could see how the stock is, and it's way worse than what they're having it portrayed here. You could actually see it like that 81% year to date, just totally ruined. I hate to put it that way, but yeah. But it looks like there could be some hope for a recovery, because we are going to see why exactly now the stock has collapsed. All right. And that is due to a combination of legal, financial, and regulatory challenges, and investor concern over its ability to restart its oil production. So the legal regulatory issues: in September 2025, the Santa Barbara County District Attorney accused the company of violating state laws protecting streams and wetlands, which Sable denied. Earlier in November 2025, a court ruled against the company in a separate matter related to pipeline operations. And I don't know if it mentions it there, but I believe they also have to, they got fines and penalties that they have to pay back, and they have to repair, I think, all of their pipelines in that area as well. So just keep in mind that a lot of cap expense, a lot of debt that they have to issue again. That's why the stock has also fallen. We're going to see that reflected in a bit in the financials. So the loan term and equity needs: in November 2025 as well, Sable Offshore and ExxonMobil amended a loan agreement tightening the terms by raising the interest rate to 15%, requiring Sable to raise at least $225 million in new equity. This need for additional capital could significantly dilute current shareholders. The significant net loss of $110 million, like I said, from third quarter of 2025, also really bad. High debt and low cash. They had $896.6 million in short-term debt and only $41.6 million in cash. Corporate governance scrutiny: a special committee has been formed to investigate allegations selected disclosure by Sable CEO. offshore oil industry challenges, stock has been negatively impacted by political opposition in California. And then the market report again of what's happening going on here. And I covered this before, but here it says more of the court ruling of Sable and the political pressures too. I don't want to go into every minute detail, but you get the idea that, or at least a summary of the idea of what is actually happening with the company and why it's actually having all of these troublesome events happening, coinciding with each other. But the next thing we have to check is the free cash flow. So we're going to head on over to Yahoo Finance first. In 2021, it was negative 2 million. Now it's negative 1.6 million. About 1.6 million. So not great, of course, still negative. But we are going to now turn our heads over to Simply Wall Street. And we're going to first check the future growth. And the future growth is going to have a little bit of a interesting thing going on here. So we have negative 667 million for SOC, for Sable. But then it's supposed to rally all the way to positive 488 million. So I'm assuming that analysts think at least by the end of this year, it's going to be positive free cash flow when they hopefully restart their oil production. Hopefully. The financial health of the company is not great. And like I said before in the report, you could see here that they just took out a lot of debt and it just keeps ballooning. 896 million, like I referenced before, and the cash has just collapsed to 41 million, like I referenced before. And that's again because of what is happening with the whole halting of the oil production. It's obviously a big problem. And there's, of course, you know, there are a lot of short sellers in the stock, so you have to be wary of that as well, that they are short selling it tremendously. Now, we need to take a look at my DCF next. And my DCF is going to say, it's only a Wall Street forecast, that it's 97% undervalued. I would say you have to be a little bit careful because Tipranks is also going to have an incredible upside on it. You have to be very careful and know that this is a high risk, high reward opportunity. Obviously that could happen, but there are a lot of problems too. And we are lastly going to check Tipranks. So let me load it up quickly. And Tipranks is going to be 4 rating, a strong buy. And yeah, it's going to be 442% increase upside potential. So just keep in mind of that. I would say do more research on the regulatory issues. I'm definitely going to try to cover it for Q4 to see if there are any updates and if there's any kind of hope that they're going to get out of this bad situation. But remember, do your due diligence with this one because this is very risky. All right, thank you, everyone.